Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The financial markets are awaiting the reconciliation of the US budget bill between the Senate and House versions. And they're waiting for news of the countries lining up to make tariff deals. There only seems to be one, Vietnam, and the details of that remain murky. Meanwhile, American home loan interest rates fell last week to a 3-month low, and that brought a surge in refinancing, although applications for a new mortgage were basically unchanged at a low level. That resulted in the total volume of mortgage applications rising by 2.7% last week from the prior week. Monitored job cuts in June showed a relatively quiet month with 47,000 layoffs recorded. So far in 2025, the retail sector has cut the most private sector jobs this year, with 80,000 lost, hit by tariffs, inflation and uncertainty. The expected DOGE cuts aren't as prominent yet due to the ongoing legal action uncertainty. But in contrast, the US ADP employment report recorded a shrinkage in private payrolls in June by 33,000, when a 95,000 gain was expected. It's a big miss. This is a precursor for tomorrow's non-farm payrolls report for June, which is expected to show a low 110,000 jobs gain. And while the ADP report has a spotty track record of matching the official data, you would have to suspect there are downside risks to the non-farm payrolls estimates. Whatever the actual data shows, it seems pretty clear the stuffing is being knocked out of the once strong engine of the US economy, their labour market. 2025 is shaping up to be their weakest jobs growth since at least 2015, the pandemic excepted. And US vehicle sales are also easing, down to a 15.3 million annual rate and well below the March rate of 17.8 million. The pre-tariff surge has created a shadow, but few analysts think it will rise much from here, mainly because of the tariff taxes. And we don't have the equivalent China vehicle sales data yet for June, but it'll be very much higher. 32.7 million were in the year to May. However, they have their own problems of a very rapid innovation and obsolescence program and worrying viability of large parts of their industry. Xiaomi's sudden entry into this sector is causing an existential shock for its rivals. Singapore's manufacturing PMI inched up out of contraction in June from May, snapping a 2-month retreat as firms likely front-loaded orders ahead of looming American tariff deadlines. The recovery was primarily driven by faster expansion in new orders, new exports and input purchases. In Australia, retail sales rose marginally in May to be 3.3% higher than year-ago levels. For context, the Australian CPI was up 2.4% in the year to March, up 2.1% in their monthly inflation indicator for the year to May. So they have been getting real volume increases, although that may have faded recently. And this recent fade may bolster the case for a July 8 RBA rate cut. Meanwhile, Australian building consents stopped falling in May as they'd done in April and are now 6.5% higher than May 2024. Multi-unit buildings are back driving the increases. The RBA's May 21 rate cut is getting the credit. The US Treasury 10-year yield is now at 4.29% and up 4 basis points from yesterday. And the price of gold will start today at $3,347 an ounce, up $10 from yesterday. American prices are firmer from yesterday, up $1.50 at just over $67 a barrel, while the international Brent price is just under $69 a barrel. And the Kiwi dollar is now at 60.8 US cents, down 10 basis points from yesterday. Against the Aussie, we're down 10 basis points at 92.5 Australian cents. Against the euro, we're also down 10 basis points at 51.6 euro cents. That all means our trade-weighted index starts today at 68.1 and also down 10 basis points from yesterday. And the Bitcoin price starts today at $109,025 and up 2.6% from yesterday. Volatility over the past 24 hours has been modest, though, at just over plus or minus 1.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.